Hi, and welcome to Capital Mind Cube. We have an interesting presentation from Soumeet. Soumeet and me are here on the show. And, Soumeet, you've been talking about PSU oil and gas stocks. So, really, what's brewing?
Well, if you see, it has been a bumper November and December month so far for the PSU oil and gas stocks, bearing the yesterday's performance, and this is largely on the back of the reset that we have seen in both the oil and gas prices. Now, Brent crude is averaging now at around 50 $51 per barrel, while the spot Asian gas prices have increased to nearly $11 per MMBTU, that is million British thermal unit, which is the measuring unit for gas. And now this gas prices are nearly at a 2-year high, while Brent crude prices are around early March highs, and that is the main reason why this PSU oil and gas stocks have been in focus. Now, if we start off with the PSU oil and gas stocks, I'll start off with the upstream companies, and it is no need to say that if crude prices are going up, then it's beneficial for the oil explorers and the producers, that is ONGC and Oil India, because their revenue, their EBITDA all move in tandem with the change in oil prices. Now, if you see, oil is their product, and with the rise in oil prices will definitely benefit them because the selling price of the product is moving up. Now, at current prices, both ONGC and Oil India will earn some decent profits, because if you see, their cost of producing 1 barrel of oil lies in the range of around 35 to $40. This, coupled with some sequential growth in volumes, because operations have started now in India, will definitely support the earnings for both the ONGC and Oil India, that's the upstream companies in India.
This is great. I think we're fairly clear there. But what happens to the marketing guys, the IOC, BPCL, HPCL types?
Well, for the downstream companies, in a usual scenario, it should be positive, but in the current scenario, it's actually neutral, and we'll get why it is neutral to that. But why usually it is positive? Because these guys maintain an inventory, and as crude prices rises, the inventory that they had bought earlier at lower prices gets sold through retail outlets at higher prices, and which results into inventory gain, and that's the usual reason why it's positive for the downstream companies, that is Indian Oil Corporation, BPCL, and HPCL. Now, at the end of Q2, if you see, the inventory value of all the three oil marketing companies was in the range of around $43 per barrel, and current prices are in the range of around $50 per barrel. So this is definitely going to benefit them in terms of inventory gains. That is the inventory that they have with them and which have been purchased by them at lower prices. Now, at why in current scenario it's negative? Because they're not being able to pass on this rise in crude prices to the end consumers, that is through increasing the price of retail fuels, that is petrol and diesel. So in the current scenario, if you see, for the last 15 days, the prices of retail fuel, that is petrol and diesel, have not been increasing. So what is happening here is they have been taking on this hit onto their books completely, and that is coming in terms of the marketing margins. Now, the raw material, that is crude, that price is increasing, and they're not being able to pass this on, because of which the direct impact is coming on their marketing margins. And why this is happening? Because as you can see in this chart clearly, though retail fuel prices, that is petrol and diesel, are at a 2-year high, and that is clearly because of the rise in excise duty that we have been seeing. Now, on petrol, the excise duty has increased from around 18 rupees per liter to 33 rupees per liter, and for diesel, it has increased from 13.8 to 31.8. Now, this is because the government of India, during the pandemic, that is around in early May 6 to be specific, they had increased the excise duty on petrol and diesel. And because of this, if you see the retail fuel prices, now they are at a 2-year high, and this is despite the fact that Brent crude, which is the raw material, that prices are still lower than what it was in December 2018. This gives a clear bifurcation of the price charged to dealer, the excise duty, the dealer commission that they are charging, and the VAT rates. Now, VAT has also increased because it's a percentage of what the prices are charged to dealer plus the excise duty and the dealer commission. Hence, you are seeing an increase in the VAT amount, but the VAT percentages are still the same. But it is mainly because of the increase in the excise duty that retail prices are at a 2-year high, though the Brent crude prices are low. And this is what is not and because of this higher retail fuel prices, actually the oil marketing companies are not being able to pass on the increase in crude prices to customers. And because of this, that gross marketing margin, what is that, the thing that they earn on selling every liter of petrol and diesel, has been coming down. In December 2020 so far, it is already averaging lower at around 1.8 rupees and 3.9 rupees, compared to the previous month, that is November, where the gross marketing margins on diesel and petrol was in the range of around 5.3 to 5.2 for the oil marketing companies. That is the reason why so far the impact is neutral for the oil marketing companies, whereas it should have been actually beneficial for them, the rising crude prices.
Yeah, I guess politics plays a role,
Yeah,
and
definitely.
that's interesting. You got the whole petrol complex and diesel complex, where you got the upstream companies making money perhaps, and the downstream not so much because of these political constraints. What happens with gas?
So on the gas side, I'll start off with GAIL, which is India's largest gas distributor. Now, for GAIL, it's actually beneficial, the rising crude prices, and that is because of, firstly, it benefits their LPG segment. Now, that is because for LPG, the gas that they're using to produce this LPG, that is liquefied petroleum gas. Now, the prices of those gases are fixed and changed by government once in every 6 months. But the prices of LPG are a factor of crude prices, and as and when the crude price increases, the LPG price also increases, but with a lag. So, and definitely in this scenario where crude prices have now increased to around $50 per barrel, the prices of the final product, that is LPG, will also increase with a lag, and which will definitely benefit the LPG segment of GAIL. Now, coming on to the gas marketing segment of GAIL, if you see, in this segment, the company buys gas at contracted prices from different countries and sells them in spot prices or at contracted prices, to both in international and in the domestic market. Now, because of the sudden surge in crude prices, and because of the sudden surge in gas prices that we are seeing, the spot gas prices are now at a premium of around 42% of the cost price of this contracted gas that GAIL procures from different countries. While for crude linked gas prices, the discount has come down to 10% from 15% of the cost price in the previous quarter. And that's how the gas marketing segment of GAIL will be benefiting because of the surge in crude prices and the gas prices. In short, the LPG and the gas marketing segment will be benefiting because of the surge seen in this both the commodity prices currently.
No wonder the stock's doing this well. I think you've been talking about city gas as well, right?
Yeah. So for city gas distribution, if you see, they supply gas to three different segments of the society. First is the vehicle users through CNGs, then there are industrial and commercial users, and also to households, which is through PNG, that is piped natural gas. Now, because of the surge in gas prices, the only segment that will be impacted of city gas distribution companies is the industrial segment, and that margins will take a hit because for that segment, the gas that they're procuring is on based on spot prices. Now, if you see it in this chart, we're clearly showing that Gujarat gas supply sales volume of Gujarat gas is nearly 78% to industries, while for Indraprastha gas and Mahanagar gas, the impact is much lower because they derive only 12% and 13% of the sales by supplying gas to industries. And the table on the right hand side shows us how they are sourcing this gas. Now, spot LNG for Gujarat gas is 43%, which means the 43% of the gas that they're sourcing is based on spot prices. And as we know that the spot prices are now at a 2-year high and have seen a sudden rise, they have not been able to pass on this to the industrial users. And because of this, the industrial margins of Gujarat gas will take a big hit in the third quarter. And if in the fourth quarter the prices prevail, then in that quarter also. So in this segment, Gujarat gas is the most vulnerable because they procure nearly 43% of the gas on spot prices, followed by Mahanagar gas, which procures nearly 13%, and then Indraprastha gas, which procures nearly 8% of the gas requirements on spot basis.
Interesting. IGL is obviously one of the better performing stocks as well in the PSU pack. But yeah, I mean, what lies ahead?
Well, going forward, if you see the vaccine demand, driven demand will lead to a recovery in the crude prices, especially when air travel comes back. Crude prices will definitely rise, and this will indirectly or directly benefit the upstream companies. And because of the rise in crude prices, also GAIL's LPG segment and marketing segment, as explained earlier, will partially benefit. So that for crude prices, the key trigger would be air travel returning back to normalcy, and which is expected with vaccine coming in. Along with that, as and when the fuel demand increase, this will lift the gross refining margins, which will again benefit the oil marketing companies. And this is what we are expecting. The second point that I've mentioned here for the oil marketing companies, that is, government is expected to roll back the excise duty hike. Now, there are two reasons why government should do this. Firstly, because Brent crude prices have been increasing, and consumption of retail fuel, that is petrol and diesel, are also above normal now. Now, when they had increased this excise duty, at that point, Brent crude prices were around $30-$35, while consumption was also below normal. So that was the right time for the government to increase the excise duty hike, and this is the right time now for the government to roll back this hike in excise duty. If that happens, then it will definitely help the oil marketing companies to earn again a decent marketing margin, which has again come down lower in the month of December. So that could increase, because that will give them more area to increase their margins, which they're not being able to do right now. Now, coming on to the gas prices, now the recent surge that we have been seeing in the gas prices are expected to be short lived. Now, this is because the recent increase in price is because of more demand coming in from the southeast countries, which is not expected to prevail past winter. So this prices could come down. Now, coming if these prices come down, if the price of gas come down going forward, which we're expecting to happen in the fourth quarter or in the first quarter of financial year 2021, then this will be partially negative for GAIL, because they have been selling few gases on spot prices, which we had seen a sudden rise. But it will definitely be beneficial for the city gas distribution companies, because the spot prices of gases will be coming down. But for city gas distribution companies, there are different concerns that will still prevail over them, like the competition that is expected to come in because of the new regulation that has kicked in, where they have to give 20% of the capacity to third party users, where the marketing exclusivity has increased. So that is one key concern for the city gas distribution. Along with that, domestic gas prices are expected to rise. This is the gas that they use to supply to households and for CNG. So this prices are expected to rise. So this could impact their margins, and a possible rise in dealer commission, because the oil marketing companies have been asking for a higher commission from the city gas distribution companies. So these are the few concerns that will still persist over the city gas distribution companies going forward.
Interesting. That's a good, I think, overall landscape of the oil and gas pack, which is dominated by PSUs, although perhaps some of the private players have larger market caps. And it's interesting to see how, PSU stocks have been working in December 2020 versus perhaps what happened in the earlier part of the year. It was wonderful, Soumit. Thank you so much.
Thank you,
And
Deepak.
thanks so much for all of you for listening. Tell us your comments. We're at capitalmind.in. We have a post on this, more on the YouTube description of this video, and we'd love to hear your feedback. Cheers.